The stock market was one of Trump's favorite talking points, not lately. Stock market volatility, why Trump is no longer boasting about Wall Street. During his first term, Donald Trump frequently cited the stock market as a key indicator of his success, taking credit for its consistent upward trajectory. Following his election victory, he pointed to market rallies as proof of economic optimism. However, since his inauguration for a second term, Trump has remained notably quiet on the subject even after the S&P 500 hit a record high on February 19. Since then, markets have struggled, with the S&P 500 falling nearly every day, now sitting below its level from January 20th, when Trump officially took office. Other economic indicators, particularly those closely tied to economic cycles, have also declined. Market uncertainty and investor jitters. Despite a late-day surge last Friday, the S&P 500 ended its second consecutive week in the red, marking the first such streak of losses since October. Tech stocks, led by AI giants, have struggled. Nvidia has fallen nearly 10% since Trump's inauguration. Bitcoin has tumbled roughly 20% over the past month. Consumer sentiment is declining, with investors worried about economic instability and trade war fears. The daily tariff rhetoric and extreme uncertainty have investors on edge, said Andrew Brenner, head of international fixed income at National Alliance Securities. While it's still early in Trump's second term, the markets are showing signs of nervousness, with many investors expecting increased volatility in the coming months. What's driving market volatility? The current stock market landscape is vastly different from when Trump first took office in 2017. Pre-2017, the market was still recovering from a domestic energy crisis, with lower interest rates supporting slow but steady growth. Trump's first term, tax cuts and pro-growth policies ignited a major stock market boom. Today, after 2 years of 20% plus growth, valuations are at historic highs, making further gains more difficult. Additionally, the stock market is now more reliant than ever on a handful of major tech companies. The Magnificent Seven, a group of AI-driven tech giants, now represent nearly 1/3 of the entire S&P 500. A small drop in these stocks can send ripples throughout the market, increasing market-wide volatility. If AI competition intensifies, these stocks could lose momentum, further dragging the market down. Nvidia, a key player in AI chip manufacturing, has already seen its stock decline significantly, mirroring the struggles of the broader tech sector. Investor sentiment and the fear factor. Investors remain on edge, with many expressing concern about market direction. A recent Bank of America survey found that nearly 90% of fund managers believe stocks are currently overvalued. The CBOE Skew Index, which measures market expectations for a potential crash, hit its highest level ever on February 18th, just before the S&P 500's record high. While few analysts predict an imminent full-blown recession, fears of a trade war, inflation struggles, and Federal Reserve policy shifts have made investors more cautious. Will Trump regain control over the market narrative? At a conference in Miami on February 19th, Trump confidently stated, "I think the stock market's going to be great." Yet, his market optimism doesn't align with reality. The Dow Jones is up only 7% since the election, not the 10% Trump claimed. The S&P 500 has gained just 3% since November 5th, despite its earlier peak. As trade tensions rise, AI stocks fluctuate, and economic policy shifts loom, one thing is clear. The stock market is no longer the political trophy Trump once used to measure his success. Will the market bounce back, or is this just the beginning of a larger sell-off? Share your thoughts in the comments. Don't forget to like and subscribe for real-time market updates.